I thought we'd take a look at the oil price this time around, given what's happened over the last 12 months. If we go back slightly less than a year, we saw the price of oil hit a multi-year high off the back of the Russian invasion of Ukraine. And then from last summer into December of 2022, we saw the price drop by, around 40%. I think that fairly persistent slide we saw. And then since those December lows, we've seen oil stuck in a somewhat sideways range over the last couple of months. There are still opportunities, of course, in sideways ranges, but we haven't had much in the way of medium-term direction. So I thought, let's take a look at what the year ahead might hold for oil and where the opportunities might be. I'm David Jones, and as usual in this video, we will catch up with some of the recent news to do with the oil price. We'll take a look at what the key drivers might be for oil in the months ahead, and then we'll jump onto the charts, do some technical analysis, some chart analysis, and see where the trades might be, both from a short and medium term perspective. And even though it's been a bit quiet over the last couple of months, stuck in this range, there are always opportunities. So we'll come to that in a second. Before we do that, I'll just mention the newsletter that I launched a few weeks ago. Comes out on a Saturday once a week, free of charge. And there are a few parts to this newsletter. It's a catch up, what's been going on in markets, what I think is important. It's a look ahead to the next week, the hot market that I'll be watching in the week ahead. There's also at least one trading tip in there every week designed to make you a better trader, and an update on my own trading performance. Like I say, it comes out on a Saturday. Just once a week. To sign up, if you go to my website, jonesthemarkets.com, scroll all the way to the bottom of the page, and you should see a box there that lets you put in your email address. So if you do that and you're signed up, you'll start getting it from next Saturday. I've also put in a link to the most recent newsletter, so last week's newsletter, in the description of this video for you to have a look at it and get a feel for the sort of thing that I cover every week. Right, let's get into it and take a look at oil in a bit more detail. So if we go back to February, March last year, 2022, we had a sharp run up on the Russian invasion of Ukraine. We saw the price push up to, about $125, 125, 126 a barrel, something like that. And that did end up being the high for 2022. So it was a multi-year high. I think it was 13-year plus highs in the end we saw for oil last year. Not surprisingly, when we see conflict or instability, whatever you want to call it, in oil-producing parts of the world, it obviously has an impact on the price of oil, and we saw this price get pushed higher. But since the summer, like I said at the beginning of the video, we've seen the oil price drop by about 40%, and there were a couple of things driving this. Clearly, I think that the big one was concern about a global economic slowdown, and partly caused by higher inflation. We know that inflation has been an issue around the world. The central bank's actions to combat inflation is to raise interest rates. Raising interest rates normally has an impact on economic growth. So the concern was by traders that we'd see a slowdown in economic growth, and this would impact the demand for oil. So we saw the price of oil slide into December of last year. If we look at perhaps some of the recent news about oil, some of the recent updates in the US, the body, the Energy Information Administration, expects crude oil production to rise by almost 600,000 barrels per day during 2023 from a US perspective. Russia has said that it plans to cut its own production by 500,000 barrels per day. If we look at OPEC Plus, the cartel of oil-producing countries, they said they're expecting to make little to no change so far. That's the expectation in terms of production as the year goes on. So nothing too exciting from a supply point of view. But I do wonder, if we're looking ahead to where's the price going to go this year, it feels that we're in almost a holding pattern for oil at the moment, trading in this sideways range, $70 on the downside and about $84 on the upside, banging around within this range. But I do wonder if, as the year goes on, is the potential for surprise on the increased demand side of the seesaw, of the balance. If we've got China continuing to lift some of its pandemic controls, and perhaps the global economy doing better than many would have expected at the beginning of 2023. You know, if we do see a stronger bounce back by the world economy, you would expect that to have a knock-on impact in terms of increased demand for oil. So perhaps the surprise is, as the year goes on, more demand for oil, which helps lift the price. Let's see. What's going on in the market at the moment is fairly inconclusive. I think everyone's almost waiting and seeing where this year goes for the world economy. So as usual, to try and make sense of it, let's jump on the charts and take a look at things in a bit more detail. So let's take a look at this oil chart. This is the daily chart going back to December 2021. So just over a year's worth of data. There's that run up in March of 22 on the Russian invasion of Ukraine. Interestingly, it did try and have another go in June of last year. Couldn't get back to those 13-year highs around 130 on this chart. So it peaked around, 125, just shy of that last summer. And then we're in this downtrend. And if I step things forward, so the trend line has been broken. That downtrend has been broken about the middle of January, so about a month ago. But, and this for me is why it's a bit inconclusive at the moment. Look at the high we had beginning of December, around $83.70. And the market did fall off from there, move to a new low for this downtrend. And the break of the downtrend hasn't managed to take out 84. So even though that downtrend line has been broken, we haven't really had a significant break of a previous important high. So that absolutely for me is why it's still in this sideways trend at the moment. We've got good support at 70. We've got resistance ahead of 84. If we looked at it from a short-term point of view, absolutely, there are opportunities. You know, whenever it's pushed up above 80 over the last 6 weeks or so, it hasn't stayed there long. The sellers have come back in. And on the flip side, when it's dropped back to the low 70s, we've seen the buyers come back in. And we just have this sideways range for oil at the moment. And it does feel as if almost the market is marking time to see what the rest of the global economy looks like this year. So for me, I'm waiting for a break. So I'm leaning towards that perhaps we do get an economic surprise for the good. So we see perhaps as the year goes on, better than expected economic figures from perhaps the doom and gloom that many were forecasting end of 2022 coming into this year. So for me, the sign that the trend really is turning will be a break through 84. So I think that's when things on the upside could get interesting and we can start looking for perhaps a recovery of oil, initially targeting these highs from October of last year around $94. So my gut feeling is that's the way the market's going to go. But I'm not going to do anything until it happens, because if we look at the downside, let's say things get worse or don't improve at a decent pace and we have perhaps some oversupply, then the risk is we see a breakthrough 70. If that happens, I'd be targeting a run back to the mid 60s for oil. So not a massive plunge, but I think the risk is we start probing these lows from the end of 2021 if we do have some negative news. So for now, for me, it's absolutely a sitting on my hands market. If I flip over to the hourlies, that's what the range looks like over the last couple of months. And you can see when it pushes up above 80, there's an opportunity to sell short. When it drops back, you can see to the low to mid 70s, there's an opportunity to be a buyer. But it's a market that doesn't have any medium-term direction at the moment. So for me, from a trend following point of view, there are much more interesting markets to trade. It's a bit stuck in the middle. If we look at the RSI down here, we're not getting too much from the RSI. It did dip near oversold on that latest sell-off back to the low 70s. But it's a watch and wait for me at the moment. So I'm suspecting we'll get a breakout through 84 and perhaps we'll see further recovery. But so much depends on what's happening with a bigger economic picture in 2023 for oil. That's it for this update on the oil price. So even though it's been sideways, I still think it's interesting. And I am leaning towards perhaps we'll get a surprise, a breakout to the upside. But let's wait and see. Don't forget to sign up for the newsletter. Go to my website, jonesthemarkets.com. Get that every Saturday when I send it out once a week. The link to the latest one is in the description. But for now, for this look at oil, we'll leave things there. Good luck with your trading.